Hello everyone, welcome to the Freedom Watchdog channel. Today we're going to have a look at what happened with asset prices during the 1970s, and more specifically what happened with gold, because from 1970 to 1980 it endured over a 2000% increase. So in January 1970 gold was $35 an ounce, and then it peaked up by 1980 to $760 an ounce. Now, just to put this in perspective, gold in January 2020 was at around $1,500 an ounce. If you had a 2000% increase from there, it would put it at $30,000, and I can assure you, even if you hold gold, you're not going to want to live in a world where gold is valued at $30,000. It would be disastrous, but this is what's happened before, as you can see. Now, I know a lot of people probably blame this on Nixon coming off the gold standard in 71, and that is obviously the case. They made a lot of promises they couldn't keep to, and this is the result of that. But actually, when he came off it, it did increase to from 1971 to 72. But as you can see on this chart here, it's pretty much flatlined. The real gains was on between 1973 and then 74, and it just went onwards from there. There was a stock market crash in 73, and you can see it dipped a bit here, but it soon shot up again. Everyone wanted safety, so they rushed into gold like they do. Now, after that happened, you can see it did dip slightly. It was pretty much dead for a number of years from those massive gains. I mean, don't forget, from 1970 to 75, it's gone from $34 to $176, so it's already a massive gain in 5 years. And then it did go quiet for a bit. Now, what happens in inflationary environments, even though people realise that prices are going up, it doesn't actually register with them that it's not so much prices going up, but it's the value of their currency going down. And that's why the biggest gains in inflationary eras for precious metals are always at the end. People do start to panic and rush in. And the reason being is most stocks, especially the main ones like the Dow Jones, like the Nasdaq and the S&P, they normally do quite dreadful actually in inflationary times. There may be some lesser known stocks out there that do quite well, but these main ones do quite bad actually, and I'll show you very shortly. And in this time they went through a whole decade of doing terrible. This is another reason people rushed into gold. Inflation was getting incredibly out of control at this point, and the Federal Reserve was panicking a little bit. As you can see from this chart, this is a chart of interest rates, and as you can see here, around 1980, just before it, they was raising them at quite a rapid rate, down from 5%. I'm guessing this would be around maybe 1977. Sorry, I don't have the exact data here, but you can get an idea. They rose them incredibly sharp, put them up to 10, hold it steady a little bit, creeping them up, and then realised they had to spike all the way up to 20%. That's crazy, and this is the path we're heading down right now. But as I say, at this point, this was a nail in the coffin for a lot of stocks, because the money they want to borrow, if the interest rates are higher, then they're going to be paying more on their debt for their loans. Same with things like mortgages. I know people were still doing it, and there's a lot of money going around, so at least the velocity of money was quite high. But nevertheless, taking out loans was a serious thing if you're taking them out at 20%, especially if you're used to a lot lower historical prices, interest rates, sorry. But as I'm about to show you now, you'll see the Dow Jones, along with many others, from 1970 to 1982 this is. I've zoomed in on the chart. You can clearly see the trend here, so I'm not going to go into too much detail, but if you want to check these charts out yourself, go to macrotrends.net. Highly recommend the site. It's great for looking at these historic charts to get an idea of where we may be heading, and to look at cycles and all that kind of thing. Nasdaq, same thing. This was the crash of in 1973. Crashed in epic style there, as you can see. So that's the Nasdaq, and the S&P, similar thing. Crash right down, bounce back, but the trend line is going right down, as you can see. none of these stocks fully recovered in this decade. So that's something to take note about. When people are quite happy holding on to these stocks long term, or any asset long term, you need to be aware of these cycles. It's not about timing the top and getting out before it crashes or anything, or trying to time buying in at the bottom or anything like that. Using these charts, you can see what's overvalued and what's undervalued. So you don't need to, bear the brunt of these crashes. I mean, do you really want to wait a full decade or longer to recover your money? Because we're in a one hell of a bubble right now. So that's why it's great to be aware of these cycles and what we may be heading for in this inflationary environment. This is where we are now in terms of where we could be heading. Now, even though stocks did quite badly, commodities fared quite well. Here's copper prices. So while the stock market crashed in 73, copper actually went up quite high, but then it obviously come back down again. But you can see it ended up at the end of the end of the decade, very similar to gold in terms of the trend. Same with crude oil as well. Look at this. I mean, it never went back down, crude oil, after the crash in 73. And this is generally what we see in inflationary environments. Commodities always fare much better than stocks. And also, there's been a number of economists come out and say that we're heading for a commodities super cycle. But even if that's not the case, I think precious metals are going to do incredibly well over this decade. And also, what we've seen in 1980 was the silver squeeze, which got people interested a lot more in gold as well. It brought a lot more attention to gold, but the ratio was 16 to 1 in 1980 at the peak of the silver squeeze. I think it was at the peak 16 to 1 or thereabouts. So you imagine if you had $30,000 gold, going back to the example I gave at the start of this video, if gold went up by 2,000% and we had $30,000 gold, imagine if we had a 16 to 1 ratio of silver on that would make silver at $1,875. And many believe as well it'll overcorrect that ratio and go more like 10 to 1 at some stage, but that's a crazy number. Over $1,800 silver. This is what we could be looking at by the end of the decade, folks. We're in crazy times, and back then they wasn't printing anywhere near what there's printing now. So interesting times ahead. Make sure you're aware of all this information. Make sure you go to macro trends. Make sure you understand what happens in inflationary environments, because that's what we're heading for, and that's what we're into right now. So thank you for watching my video. Make sure you like, comment and subscribe, and I'll see you next time.